Good afternoon, everybody. There is so much attention paid on an annual basis to the new year, where the New Year's resolutions kick in, and the kickoff to the new year starts. And people do that personally, people do that professionally, people do that in business. There's always this kickstart at the beginning of a year, whether it's a calendar year, fiscal year for a business. We're going to get started. We're going to start the year strong. We have a new budget. We're going to have a great year. And then the daily operations kick in, the chaos kicks in. Next thing you know, it's the 12th month, and maybe you've prepared a budget for the next year and you're starting to think about the next year. And it's been a year since you've actually looked at your business. So we're going to talk today about another approach, an idea, an idea that I have about building up that energy and building up that exercise of reflection, the discipline of management, working on the business instead of in the business. Throughout the year, but we're going to talk about it today in context of a mid-year review. My name is Carl Baker. Thank you all for being here. Typically, we do this on a live stream basis, and then we put the recording out. We were having IT issues, and we had a moment where it worked. And so just to make sure that we get the recording done, and we decided we wanted to get it done before the projected time, which we typically do this at 10 o'clock Central Time on the third Thursday of the month. And we're doing it a little bit before that, not too much, so that we can get the recording out on time for those that might be interested and might have scheduled their time to watch it. So you'll still be able to watch it on the recorded time. Thank you, by the way, whether you're watching this at that time, watching it at midnight, whenever, to spend your time to watch this video is fantastic. My name's Carl Baker again. I own and run a firm called Baker CFO Advisory. We are an accounting firm providing various accounting and fractional CFO services, consulting, tax services to a number of types of businesses. Those businesses include healthcare enterprises, dental offices, physicians. We also serve nonprofits. We also serve other types of for-profit enterprises. We have a number of skill sets, and our expertise is pretty deep. We work with businesses that are growing, that are just looking to grow and get to the next level, but they want some part-time financial leadership services or accounting services in some fashion, and we're happy to help. So that's what we're about and what we do, and we love doing that each and every day. I also want to throw out the thank you to Erica. She helps me put the announcements to this to this live stream out in advance in our social media. She helps put the presentation together. She helped me today as we were working on the IT issues. So just thank you to that. Thank you to her for that. Also, as a quick reminder, we have a very nice series of white papers, and this month's white paper is on this topic, in which we're going to talk about a mid-year financial review, and we have the link in the comments below, and you'll see that there. You can also go to our website and find it there. We have a nice series of newsletters and white papers, and would love to have you read those. I'm well aware of the fact that most of you are not going to pore over every word of it, although we're certainly ready for that to happen. And hopefully you'll get a couple nuggets out of there that might help you with your business. So that's all I'll say about that. Happy reading. Hope it gives you some ideas. All right, so let's move into the presentation and talk about some of the content. So I wanted to first say, just to sort of establish a baseline, what is a mid-year financial statement review? Because that might sound awfully boring or certainly academic. So what is it that we're talking about? a mid-year review is not, or a mid-year financial statement review is really a mid-year business review. It's a way for you in the midst of the chaos of running the business. We think it's good, and I even say necessary, to have the discipline of reflection, to have a moment in time where you evaluate your business. You spend some time working on the business instead of in the business. I'm envisioning a lot of sole proprietors or maybe small ownership groups, and it's very easy to just look at the bank account, maybe glance at your financial statements, but you're really on to the next project or whatever that means for you. And you don't ever spend the time to just reflect on and manage the business. So we're saying take a moment in the mid-year. If this is a calendar year, we're recording this in July of 2025. So if you're a calendar year, it's mid-year, but the concepts really apply even if you're a fiscal year or organization. The financial statements themselves of a business are really just there to tell the story of how the business is doing using numbers, using dollars, but they're really just there to tell the story. And so we're going to talk about the financial statement review with the concept of a business review in mind. The other thing I will say is we're suggesting a mid-year review, but that's because I'm envisioning a lot of people that will listen to this. They probably don't have an EOS, an entrepreneurial operating system, or some sort of daily, weekly management system in place. And if you do, great. This might be a different exercise for you, and you could take a more advanced approach to this. The concept is to stop every once in a while. The EOS system, the Great Game of Business, they actually have a rhythm that talks in terms of weeks, months, quarters, etc. And all those things are great, and you might eventually get there. But if you don't get there and you're really just running the business with full good intentions, maybe by the seat of your pants, no insult meant there, but just you're looking at the bank account, you're getting on to your next customer project. I'm just suggesting every once in a while, and in this case, a mid-year review, to review what's going on in the business and what you might do differently if you glean a few nuggets out of a review like this. So that's enough of a preface. Hope that makes sense and it lays the groundwork for this. So let's move to the next slide. So what are your financial statements really telling you about your business? Well, first of all, hopefully we talked about the fact that at the beginning of the year, you have probably established some either overt or subconscious expectations about what you hope will happen for the year. And now you're pausing and looking at your financial statements and looking at what that story is telling you. And it's the truth that the results are going to be different than what you expected. Maybe they're pretty close. Maybe they're materially different. Maybe it will be a surprise to you. Maybe it's not a surprise, but just understand that the results are going to be different. So a set of financial statements, of course, as I've said a couple times now, they tell the story. There are different reports and different presentation formats of those financial statements, but a profit and loss statement, your income statement, are going to tell you the story about the sales activity, about your staffing costs, about your other costs, your cost of sales, etc. So that's one piece. Your balance sheet is going to tell you about your cash flows. It's going to tell you about your financing issues. It's going to tell a different side of the story. So this review needs to be a comprehensive review, not just what's in your bank account, not just what your sales are telling you, but other things. How are you positioned with your financing? EBITDA, earnings before taxes, depreciation, amortization. That's really a net cash flow concept that is a number that tells us funds that are available for debt service, for paying the owner, et cetera. So what's the story there? What sort of working capital shifts are you seeing, and what sort of liquidity are you seeing? And there's certainly performance indicators. There are metrics that you can apply. But what is that story compared to what your expectation is, and what sort of nuggets do you glean from that? Excuse me, I've already alluded to a couple of the other things outside of the P&L, and that is, what is your balance sheet showing you? What is your cash position? If you're doing all this work, how, and you have drawn some conclusions about your revenues and how they are compared to your expectations, we do the same thing with how is that translating into your cash position, your working capital position? Are you actually collecting from your consumers or your clients? Are you paying your bills? Do you have funds available for some reserves, for a rainy day fund? All those things. Are you underlined or misaligned in your capital? What other sort of red flags that you might be aware of? If you have discounted in your P&L to grab market share, you probably had more than your fair share of wins during the year, but eventually those discounts come back to you in lower collections than they would have been at full rate. Those lower collections eventually mean lower cash position. And so are those things telling a story as you look at the balance sheet? So those are a few comments that I have about what your financial statements are telling you. So let's dive a little bit deeper. We're going to talk about the operations performance. We're going to talk about staffing. We're going to talk about communication of these issues, and we'll wrap it up from there. So from an operational standpoint, you have, as I've really mentioned this already, you're operating under a set of assumptions about what you want to have happen in the business for the year. Presumably you kicked off at the beginning of the year with some sense of urgency, some excitement, turning the page, new chapter. So how are those things going? So what are a few of the points here? You have those assumptions. What are things happening? Analyzing whether the day-to-day execution supports the goals. We say strategic growth here, but are you accomplishing what you had hoped to accomplish? I talked about the concept of discounting to grab market share and the implications of that in your revenues, the implications of that in market share, the implications of that in your cash flow. But there are other things as well. So we'll talk about staffing and other costs, but just understanding what are some of those things that you are seeing as you look at the P&L compared to what your intentions are. A few of the other things that we talk about here, if you are a type of business that have multiple service lines, how do those service lines look? Maybe you have multiple service lines, multiple locations, and what are your contribution margins as you slice and dice the business from a combined P&L to a programmatic P&L or a location P&L or a service line P&L? So what are some of the things that you're seeing there? Are you seeing a dip in your profit margin? Are you seeing an increase that's a bit unexpected in your costs? Maybe it's time to look at some of your vendor relationships, or it could be something as simple as taking a look at your accounting. Are the books actually reflecting what you know to be true about what's happening with the business? Because that does happen a lot as well. you might have a certain expectation and a certain knowledge about what's happening. The numbers don't reflect that. Well, that probably means there are some accounting issues, and it might have to do with attribution among programs. It might have to do with attribution among locations. So it could just be a process thing. And you can look at that as you evaluate your contribution margins and your financial statements from that perspective. Using variance analysis, it's very mathy, but it's very common in a financial statement to compare to a prior year, a prior period, whether that's on the balance sheet or the income statement, and identify those variances as they are, and then as you intended for them to be. So a variance in cash might not mean anything if you were expecting an increase in cash reserves. So you read these variances with that in mind, but just be aware of that as a tool to use as you in your assessment. Again, if you're doing this analysis on an annual basis, that's 12 months in between analysis one and analysis two. We're suggesting, and a lot could happen in between there. So we're just suggesting do this more frequently. Some models, again, have that analysis happen on a weekly basis for certain things, monthly, quarterly, etc. We're suggesting in this presentation to think about it on a mid-year basis as a first step. And what I guarantee you will find is that by doing that, you will see things in the business that will cause you to pivot. So isn't it better to pivot in Q3 with Q4 wins rather than waiting until the end of Q4 and have those wins be in Q1 of the next year? Because a win in Q4 will only set you up for more wins next year in Q1, 2, and 3, etc. And they will just build on each other. So the more opportunity you have to make these assessments and build on these wins and make the pivots, the more opportunity you will have to manage the business more effectively, see the changes that need to be made so that you can accomplish the goals that you want to have. So what needs to shift in Q3 to accelerate those Q4 wins? So what are tactical or strategic pivots that you need to make? And we've alluded to a few of these things. You might have pricing issues, collections issues, hiring issues, maybe taking a fresh look at marketing, etc. So those are a few of the things. Should you double down or pivot in your current investments? Should you pivot to a new project? Is now the right time to pause on a project, accelerate on a project, move to a new service? Without this discipline of reflection and management, the chaos just continues, and you won't ever force yourself to think about these things and make the pivots that you need to make. We have plenty of other presentations about the concept of forecast, scenario planning. All those things are great tools to help in this sort of assessment. Fortune 500 companies, I guarantee you they do these sorts of reviews and scenario planning in a very disciplined way. And scenario planning, rolling forecasts are tools that you can use to add to this process. So we've talked a lot about the balance sheet. We've talked a lot about the P&L. I know that for the typical business owner, one of the main ways that a business owner gauges the success or lack of success of a business is to look at the bank account. So I intentionally talked about other things first to plant those seeds, to give you a few nuggets there. But we still do come back to cash flow, cash position, and understanding how all those things translate into cash, because it takes cash to invest in new products. It takes cash to pay payroll. It takes cash to give you as a business owner the return that you need, that will give you the energy to continue doing what you're doing. So we do continue to, we do talk about cash flow, cash position as a weapon. So what are some of the things to talk about there? I've alluded to a few ideas, the collections, discounts. Are we collecting? Are there any customers that we need to talk to potentially ramp up the cash collections, have those difficult conversations, necessary conversations? Are the discounts that you may have decided to do early in the year to grab market share, how are they impacting? You can see how they're impacting your P&L, but how are they impacting your cash position? Are your discounts too deep such that they're not covering the costs? Good time to look at that. So we talk about those things. Is the cash flow aligned with your growth ambition? I mentioned it earlier, it takes cash to invest in the business. You need to have cash to seek financing. You need to have some reserves. You don't borrow when you're dead broke. You borrow from a position of strength. So as you have those growth ambitions, what does your cash position look like in terms of what you're trying to accomplish with your business? And we talk about the buffers. That's another thing with the funding flexibility. Seasonality. We refer here to the volatile Q4. Maybe in your business that's not applicable to you, but you may have some volatility in your business. Most businesses do have some volatility, seasonality. It's not a pure straight line. So just being aware of that and positioning yourself and readying yourself for that. I'm working with a client right now where we are very overtly planning for a trough in cash collections and what to do about that. One, plan for it, prepare for it, not panic, and get to the other side. So that's just an example of some things to talk about with your cash flow. Moving to the next concept, which is diving a little deeper into operations, building a high impact team. So we've been looking at the P&L, we've been looking at your cash, your balance sheet, comparing them to your intentions. What does it mean in terms of your colleagues, in terms of your team? Frankly, as an employer, do you see the productivity that you need for your employees? Obviously, an employer needs, frankly, to see a return from their staff members. You're carrying out services or you're building goods, whatever. You're using staff in order to carry out a service to the community, and that there needs to be a return on that. So, does the productivity compare with what your expectations are? Are there some mentoring issues that need to happen? Are there some leadership issues that are available to some of your staff? Are you looking at your staff? And I say pull staff up and give them the right opportunities so that you incentivize them to stay. Now is a nice time to talk about that concept. As I'm talking about this, a concept of that I have taught staff for years in my own line of work is working at our own level of incompetency, pushing work down, building staff by mentoring, teaching, giving them the right skill sets they need to grow, advance, remain engaged, and obviously do all that with client service, customer service in mind. But what are those opportunities? And then I also bring up in this slide the concept of your compensation structure. Excuse me. Is it aligned with those performance metrics? Are we at market? Are there opportunities? Are there needs there to evaluate your compensation structure? All right, moving on to the next thing, which is we've done this assessment. How do we communicate any mid-year adjustments with confidence? How do we communicate any changes, presumably some material, some less material, in such a way that it doesn't create panic? So we're not making changes because we're losing. We're not making changes because we're going out of business. We're not making changes because we're panicking. We're making changes because we are applying our leadership skills we have a vision as to where we want to be, and we're continually moving towards that. It's not a straight line, and we're continually pivoting and navigating, or using a sailor term, we're tacking back and forth in order to get to our objective, in order to arrive at our destination. And it's never a straight line. But not everybody understands that. They see change as potentially a problem. And so it's our job as business owners to communicate this in such a way that people follow, are engaged, and understand that. So what financial story are you telling your stakeholders? Stakeholders might be, in some cases, your clients, your customers. That might be most likely your staff. But just being aware of those concepts are important. Creating a board level narrative. Uh, and I say board level, you might be a for-profit enterprise with a board, with a mentoring team, formal or informal. You might be a nonprofit, and you have a formal board. You might have other constituency that are interested. Those might include bankers, lenders, investors. So in all those cases, if you think that it is necessary in order to help people understand what's happening with your business, then communicating those in such a fashion, in such a way that it aligns with what you're trying to accomplish, and so that people are behind you as you make those changes. I think that's really all I have to say about that. All right, so we've talked, and I've brought it up a couple times as we move into our last slide here, and that is, in this presentation, we're talking about this concept of this reflection, this working on the business, not in the business, with a mid-year financial review. And I think this is a great first step for a business that doesn't historically do this. You probably do it informally at the end of the year as you move into the next year. It's just sort of natural to be thinking about that. There's a natural rhythm there. I'm just suggesting doubling that from once a year to twice a year. You might see results from that, so much so that you become even more interested in what you could do on a more overt and regular basis. That would probably include implementing some other models, some other management models like the EOS, Great Game of Business, or develop your own system in which you're managing the business on a more regular basis. But this sort of concept is what businesses do to achieve their objectives, the ones that are most effective. You, as a business owner, are the CEO. So what are some of the other tools that you can use? That includes obviously the financial statements, but also dashboards, key performance indicators, which is a wonky academic term that really just means understanding what one or two or three drivers, and put those drivers into a quantitative term, a metric, in order to help you see the trends from month over month, week over week, year over year, quarter, or semi-year over semi-year. But dashboards and collecting this information in an easy to grab fashion, and using that along with the benefit of trends to help steer the business on a regular basis. The mid-year review is a good first step, and then I think adding that discipline as you get better at that, I think you'll see benefits to it. So we just wanted to sort of end with that could be your future. The other thing is, if you're only doing this once a year, you're looking backwards. You're looking at what has happened over the last 12 months. If it's December, good luck in remembering what happened back in January and February. So if you're doing this twice a year, now you're looking back 6 months, you have a little better chance of understanding that. The more often you are instilling this into the discipline of your business, the more real time you will be evaluating this with real-time data, with more current data, and the more opportunity you have to make real-time decisions. So just see that as an opportunity and plug that in the back of your head as you're managing your business and gleaning a few nuggets out of this. It will just give you that opportunity to have some agility. I like how we end this slide with the comment about culture and cadence, because the concept presumably is that this leadership will trickle down or throughout the rest of the organization, and you have the opportunity to make this type of discipline, reflection, assessment process be a part of the cadence and the culture of the organization. And what a great thing that would be. So let me just end with, besides a thank you, end with how to take all of this and assess what to do with this. Hopefully you have 2 or 3 nuggets. If you've never done anything like this, I think doing this, and this doesn't have to be it can't be a 3-month exercise. This is a pretty brief assessment, and I think it's something that could happen relatively quickly. Use somebody like me, do it yourself. I'm actually happy to have a conversation with you, but I'm just encouraging you, reflect on these comments and understand what's your story. What do your financial statements tell you? What's the story that you see out of those financial statements, and how do they align with what you know to be reality and what your intentions and objectives are? And let that be a guide for how you take your next steps. And a quick reminder again, go to our website, go to the link in this video. You'll see it in the comments. Sign up for our newsletter. I think we have a pretty great series. You'll also have an email in there and a phone call. A phone number in there. Always happy to have a conversation with anybody if you'd like to just bounce a few of these things off of us, and we'd be happy to have that conversation with you. No high pressure sales, just looking to help people. So happy to have that conversation with you if we can give you a few nuggets, elaborate, be a sounding board briefly. Happy to do that. For those of you paying attention to this series, next month on the 3rd Thursday of the month, Lord willing, that we have our technology issues solved by then. And we're going to talk about financing, preparing for financing positioning, what lenders, investors really look for. I use the term financing positioning very intentionally. Many times I've seen companies wait to the last minute and go to the bank because they think getting a loan is what's going to help them. And I say there's a better way to do that. Financing positioning, being ready. You don't go to a bank when you're dead broke. You go when you're positioned to obtain the financing that you're looking for to help you with your goals and objectives. And we're going to talk about that in a little more detail next month. I'm looking forward to that. It's a topic that comes up a lot in my line of work, and really looking forward to that. Until then, thanks. Reach out anytime. Happy to have conversations. Thanks, as always, for joining our session, and hope you get a few nuggets. And until next time, be well. God bless. Bye-bye. Thanks.